Good afternoon, gentlemen, and what PLC Quarterly 17 Investor and Analyst Conference. I'm the Executive Director and Distribution for Wapic Insurance PLC, and I will lead the presentations today. Presenting with Mrs. Zing, Manager of Wapic Insurance PLC, Mr. Anlaye, Manager Life Insurance Limited, Mr. Managing Director of Wapic Insurance General Limited, Mr. Olufemi Obaleke, Executive International Subsidiary, Mr. the Chief of the company, Mr. the Chief Officer of the company, and Ms. Giwam, the Strategy, IT, and Investor Relations. Starting at which past they are, just to allow more participants on the call. I'll be back. Thank you very much. Good afternoon, gentlemen. Once again, we are welcome to the Wapic Insurance Quarter 1 2017 Investors Conference call. My name is Lee. I'm the Executive Director in charge of Sales and Distribution for Wapic Insurance PLC. Present this afternoon are Mrs. Yinka Adekoya, Managing Director of Wapic Insurance PLC, Yaro Jelu, Managing Director, Wapic Insurance Ghana Limited. Mr. Ami Ogunlaye, Managing Director, Wapic Life Insurance Limited. Mr. Oli, Executive Director, International Subsidiaries. Mr. Taiwo, the Chief Financial Officer of the company. Mr. Pitman, the Chief Risk Officer of the company. And Amu, the Head Strategy, IT, and Investor Relations. To the presentation, just a few housekeeping matters. And as such, the presentation is shared on your desktop and laptop. If you're joined by your computer, we'll be kind enough to mute your computer so that you can hear us. And such that background noises does not interfere with the audio. When the presentation is completed, we'll have left ample time in the agenda questions. Please hold at that point or your at that time and speak via the chat feature on Wapic. Attempt to moderate the question as seamlessly as possible. Please indicate to ask questions. And finally, we would like to remind you that all is being recorded and we are available on our site www.wapic.com as a presentation. Thank you, and we'll proceed to the presentation properly. We're taking us through Wapic Insurance, issues the operating environment, as well as regulatory environment. Mr. Keita will take us through the financial view, and I'll come back after to present the outlook for the future as we see it. We'll move to slide 5, which presents about Wapic Insurance. We are listed on the Nigerian Stock Exchange. We have a GBR depository bank with the Bank of New York, Mellon. We operate entities. Wapic also serves as a holding company at this point. Wapic Limited, Wapic Limited, and we have an associated company, Current Merchant Bank. Our share is billion, made up of other shares of 50 cover in issue. Total is about 850,000. We have 18 assets under management. We operate through 6 regional offices in Nigeria, based in Abuja, Benin, Enugu, Ibadan, Kano, and Port Harcourt. Our total staff is 128. By best, and our current rating is C++ for financial strength and B+ for usual credit rating, with both rated and outlook. Include HR Nigeria Limited and Alexander Forbes. We are supporting insurance, including African, Continental, Waika, Ghana Re, as well as Nigerian Reinsurance Corporation. Our audit are PwC. With regulatory and industrial environment. 2017, NICON released a statement of priorities for the year 2017, citing prudence and innovation. The is focused on service delivery by the community, service delivery, market and diversification of distribution channels, capital validation of expenses, and future returns, regulation, framework for informational supervision, validation of senior management and persons in control functions, as well as corporate governance. Wapic supports and looks forward to the emergence of a dynamic industry. The period also endorsed the College of Insurance and Financial Management, CIFM, for bank assurance capacity development. This is development and endorsement of long-awaited channel development in the industry. With Mr. Sunday Thomas was appointed Commissioner Technical of the National Insurance Commission, and Mr. Thomas was the Director General of the Nigeria Insurance Association. For effect insurance company listed on the Nigerian Stock Exchange, NIC and the Securities and Exchange Commission have agreed on the need to collaborate on regulatory actions for better synergy. Within the period, CBN increases intervention in the FX markets. This intervention is responsible for the recent convergence trend of rates in the FX market, as well as making it significantly from an all-time low of over $500 to about 380. PENCOM ICON released a joint circular allowing life insurance companies to open operational annuity accounts with the pension fund custodian of their choice. Slide 7, which speaks to operating environment, and I'll be speaking to 4 key areas: FX rate, inflation, GDP growth, and crude oil. On GDP, several quarters of negative growth and an overall downturn in the economy. GDP by 50 bips to 0.85% in Q1 2017. This is the growth of the oil and gas sector due to a recovery in oil prices as growth in the agricultural sector. Headline is 2.26% in Q1 2017, the second consecutive month of decline in headline inflation since February 2017. On the Naira to 395 Naira to the dollar at the parallel market in Q1 2017, backed by intervention in the FX market. This reference is sustained the balance between the interbank and the parallel markets. On the prices increased to almost $57 per barrel in Q1 as a result of gains on output restriction by OPEC and Russia. This, coupled with an increase in oil production, boosted excess reserves and aided CBN's intervention in the FX market. Financial highlights, and I'd like to hand you over to Mr. Oluseyi Taiwo through this session. Thank you.
One of the group highlights. On the end, total income by 30% in contain to 4 billion from 3.3 billion in Q1 2016. Increased by 20%, closing at 3.7 billion. Total expense increased by 20%, closing at 1 billion. Our profit grew by 19%, closing at 426 million compared to 358 million Q1 2016. We had in our net investment and other income, closing at 85 million Q1 2017 compared to 306 Q1 2016. We closed it with a profit before tax of 384 million, a 1% increase over Q1 2016 figure of 163 million. Our remained relatively flat. Our net claims ratio grew by 20% for the period. For the fusion, our finance 15% quarter on quarter, closing at 0.5 billion Q1 2017. We had a 6% increase in our reinsurance asset, closing to 2.5 billion Q1 2017, and our total assets grew by 8%. Within that, shell funds remained relatively flat, while our total liabilities increased by 1%. The next slide, income statement review. GW 25% quarter on quarter to 3 billion at the end of Q1 2017, up from 3 billion achieved in the corresponding period of 2016. Range grew by 23% to 879 million as at Q1 2017 from 71 in Q1 2016. This is by our increase in facultative insurance to balance our exposure on specific risks, particularly in our oil and energy and general accidents portfolio. 8% upsurge in our other operating income was largely driven by realized foreign exchange gains, particularly in our Ghana operations. The group increase in gross claims payout for the period when compared to prior period last year, driving the 40% growth in claims expense from 463 in Q1 2016 to 649 Q1 2017. The right profit improved by 19% quarter to close at 426 million in Q1 2017, growth in gross written premium. As we implement our transformational strategies, we explore whether the costs are optimized, and the 22% growth quarter on quarter on our operating expense is within our projection for the period. 12. Looking at our general continues to be the top performer in our quarter quarter ended 2017 with a 31% contribution to the total WP. This is followed by our oil and energy portfolio, equal performance of 18% and 14% respectively. From general accident and oil energy were the most profitable products within first quarter 2017, recording a 34% and 32% contribution. Moving on to group fees. Net 40% quarter on quarter to a total of 649 in Q1 2017, largely by a 6% increase in the claim settlement, 30 million, and a 7% increase in the IBNR to 1.6 billion for the period. Was due to our GWP, and this is the prudent approach adopted in allowing for possibility of sent claims. As for going, net claims ratio grew to 50% in Q1 2017 compared to 41% in the corresponding period Q1 2016. On the right, relatively flat quarter to quarter at a 5% increase on Q1 17 against Q1 2016, we can drive for improved efficiency. Owing in net premium income for the period, underwriting expense ratio dropped by 36% on a quarter-on-quarter basis to 16% in Q1 2017. Looks at the operating expense and our insurance expense. Operating 22% quarter-on-quarter to 886 million in Q1 2017 compared to 723 million Q1 2016. The key to these are the company investment in people resulting in a 1% increase in staff cost to 1 million in 2017 compared to 249 million we closed Q1 2016. Upgrade technology solution for business process optimization, greater efficiency and seamless operations to achieve highest level of customer satisfaction. Inflation in Naira during the period also to compare the same period last year. Reinsurance to 9 million, a 20% quarter-on-quarter growth from in Q1 2016. We are confident that reinsurance optimization focus will yield solid results in the coming periods. Slide revenue growth. The group total revenue by 10% quarter-on-quarter to 4.4 billion in Q1 2017 compared to 4 billion Q1 2016. The has continued to be the largest contributor to putting percent to the total to the group GWP, followed by the financial institutions group contributing 28%. Ghana contributed 9% to the group's total GWP. Wapic positioned its team for improved relationship and sales delivery. The restructuring is actually paying off. Slide profit position. Profit in Q1 2017 at a 19% growth quarter-on-quarter compared to the period's position. Operating profit margin remained relatively flat at 12% and in Q1 2016 and 2017 respectively. Group recorded an operating loss position recorded in Q1 2016 in its performance by 42% quarter-on-quarter to close at 5 million in Q1 2017. Return assets and equity maintained positive positions of 1% and 1.6% respectively for the period. Slide 18 looks at the statement of financial positions. Dropped by 42% compared to full year 2018 due to realignment switch and to take advantage of elevated yield in fixed income securities. Top of outstanding premiums on broker releases written during the period closed at 4 million in Q1 2017, a 20% reduction from its full year position of 2016. Liabilities increased by 25% from full year 2016 position following the growth in GWP premium during the period. Insurance obligations impacted the 11% growth in tradables compared to the position with a full year position. Rate increased by 64% to 2.6 billion in 2017 compared to 0.6 billion full year 2016, driven by growth in reinsurance expense arising from growth in our GWP. Position shows asset to total assets ratio down slightly by 6% from full position to 6% in Q1 2017 due to increased investment in fixed assets. The group asset position by 8% to close at 27 billion at the end of the first quarter of 2017. Each investment contract liabilities stood at 8.9 billion, representing 22% from year position of 1.3 billion. Grew by 21% to 11 in the period under review against the full year position. Key drivers of this growth include insurance contract liabilities and income on tax liabilities recorded for the period. A share marginal uptick to 6 billion from 16.5 billion at the end of the period. Slide 1 looks at our assets under management. The intent was aimed at improving liquidity of the group's prompt service fulfillment. All equities increased by 217, reflecting fund allocation for identified long-term opportunity. While that equities growth was underpinned by fundamentals of the portfolio stock. The value of investment in associates is reflected of the group's share of profit in our associate company Coronation Merchant Bank, and the 7th increase in bonds is to yield at the current level and improve asset liability matching of our portfolio for increased yield to others. I would hand back to the Executive Director of Sales and Distribution to the other part of the presentation.
Ladies and gentlemen, we'd like to guys for the slight issue with network while she was presenting. Just the outlook for the future. So, 4 key items: the future, operation, sales, and people. On finance, with the diversification of distribution channels, we are continuing growing revenue in line with our strategic projections. We will actively drive for a solid solvency margin and any expected regulatory change in capital adequacy rules to enhance our underwriting processes through improved risk appraisal and selection. We aim our corporate site into a world-class e-business platform and customer touch point to enable sales and enhance customer engagement. We are also in a core insurance application. Based on the solid technology foundation will be foundational to our customer experience and operational transformation. On sales, Wapic and smart solution is set to disrupt the marketing landscape. We reach innovative smart products, designing our retail insurance penetration, grow our customer base, and improve our customer experience. We work with business, especially in the oil and gas and energy sector, leveraging the local content regulation for our people cost on driving a high performance organization. Recruitment, engagement, and retention of staff remain a high priority for us. Balance and cost efficiency brings us to the end of our presentation. We would now like to take questions. Once again, please indicate your name and place your laptop or phone and ask questions. Thank you. The floor is now for questions. Ladies and gentlemen, open for questions. Please unmute your phone and your thoughts. So, thank you.
Am I on?
Good afternoon.
Yeah, my name is Lucy. I'm calling from United Capital. My question is simple. We've seen net Q rise from what I can see in your presentation. I mean, if the outlook for 2017 is going to hold the path of what we saw generally across the industry last year in 2016, do you think we are going to continue to see pressure on underwriting ratios as we saw last year? Thank you.
We expect that this will be a trend, especially given the improvements in the FX rate and of course the improvement in inflationary pressures. Trending was either by the two-pronged issues of pressures as well as the high exchange rate. And with improvements, we believe that things will continue to improve and would have positive impact on all the underwriting ratios. Thank you. Please unmute your phones and talk to ask questions. Thank you. Ladies, for other questions, we would like to close the session. I would like to say thank you very much for your participation. Having you on board again when we have the Q2 presentation. Thank you. Do have a good day.
Good afternoon.
Good afternoon.
Have a good day. Thank you.
Thank you very much.